All right, Justin, we have had a lot of questions about the differences and similarities between spread betting and CFD trading. Why don't you touch on it very, very briefly?
Okay, so there's two key differences. I'm going to go through the largest one, and that is tax. Okay, so spread betting is really only popular within the UK. It's offered globally, but in the UK it's popular, and that's due to a very specific tax determination that spread betting is not trading, it's gambling. So that big determination meant that there are no capital gains tax on spread betting. So if you make a profit, essentially, on a spread bet, you're not taxed. Now this works the other way as well. If you make a loss, you can't claim it as a deduction. So it's a two-edged sword, but nobody likes to make money in trading and then lose a percentage of that to the tax man. So that's the logical first reason that people choose spread betting over CFD trading. Noam, what's the second key difference?
So the second key difference is in the area of standardized accounts. So in CFD trading, when you are trading CFDs, you're normally buying a very specific sized contract. So a lot, half a lot, 0.1 of a lot, etc., micro lots, etc. Whereas with spread betting, there aren't any standardized contracts. So all you're really doing is taking a view on the direction of a currency pair, etc. And you're just effectively like staking an amount on that movement. And if that movement moves in your favor, up a few points, down a few points, whether you decide to go long or short, you profit.
So the two key differences are tax and the way you trade effectively.
Well, the fact that it's there are no standardized lots or contract sizes. That's really the key difference.
So the key similarities, on the other hand, is first of all, you're not buying the actual item. So let's say gold as a CFD. You're not actually purchasing gold or a fraction of a gold. You're trading based on the movement. So that offers a lot more flexibility versus I've purchased gold before and sold it, and it actually costs quite a bit because there are a lot of trading costs, handling costs when it comes to precious metals, same with Forex, etc. So that's one of the key similarities. Another similarity is leverage.
Yep.
So in the UK, the FCA regulates leverage. It's normally for retail investors between 20 to 30, depending on what you're trading. So leverage allows you to have more exposure to the market. So let's say with currency, the key problem is that currencies don't move much every day. Often 0.1% is the types of movements. If you were just trading raw currency, spot currency, you're not going to profit or loss much. So you need leverage to be more exposed to it. Both spread betting and CFDs both offer from brokers like Pepperstone or IG, they offer leverage.
Yep.
Any other similarities you want to go over?
Look, I mean, they're both pretty flexible in that you don't actually own the underlying asset. You're just kind of like taking a punt or speculating on the movements of that particular asset or instrument. So for example, currency pairs, indices, there's a whole lot of them.
And what you can trade is very similar in both with the brokers. So as I mentioned, when it comes to CFDs, from shares to precious metals to commodities, currencies, they're both available on spread betting and CFD. So it's very, very similar, except for the two major differences. The primary one being tax, which is why it's quite popular in the UK, and you should consider that factor when choosing between the two.
Yep. Justin, thanks so much. Guys, if you have any other areas of analysis that you'd like us to do for you, or if you have any requests around broker reviews or any new tools that you'd like us to kind of bring to market to help you in your trading journey, please don't hesitate to let us know. Please like, share and subscribe. And thanks so much for watching.
Thank you.